Good morning, Trading with Rich Nation. Today is July 15th. Follow the little purple hand, and you'll see that it's July 15th at 7:07 a.m. Today we're going to walk through an IRA portfolio, and I'm going to show you how I review the stocks before the market opens up at 8:30 Central Time. So this is part of our weekly updates where we check our stocks to see what's happening for July 16th, tomorrow, and even look at what's going on for future dates. Now, I plan on flying to the Philippines on July 30th. My flight just got canceled for July 19th. That's why I didn't have too much in there for July 23rd. But now that I've had to cancel my flights, I'm going to take a different week off from trading stocks, and it's going to have to be July 30th. So that happens to be a Friday morning, and Friday mornings are pretty darn busy for trading stocks. So sometimes you get thrown this curve in life, and you have to arrange your stock trading to a different day, and I'll show you how I do that. If we have some July 30th, I'll start looking at how I'm going to roll those out to August 6th, and let me show you how this is all done. Now, if you're new to the channel and some of this is a little quick for you, don't worry. Just watch and listen, and come on our live streams on Sunday nights, and we'll cover individual topics like calls and puts and leaps and buying stocks and rolling stuff out and closing them and hitting doubles, all these kind of good things that are kind of fun to do. I'll show you how it's done. But today we're going to review my IRA account, and it is up here, and you'll see the IRA account, and this is how much inventory we have in our store, 459,000. This is how much it's worth right now, 321,000. That might shock some people, but the market is really down right now, and I have no doubt as we move along and we come out of this pandemic that this product will move its way back up. But how do we actually earn enough money to make up for even the stock price going down? Well, after the first 6 months, I've already earned $121,000 in premiums. So I haven't made up the whole 137, but as everything starts moving up, which when they do start moving, they move fast. This will, I've never actually lost this kind of money in inventory, but this has been a very, very weird market. And also, I have a lot of puts out there, which will make my inventory look like it's going down, but it really isn't. And I'll show that to you as we review the account. So we'll take a look here at the first one, which is Apple, and I currently have an order sitting out there for Apple. I'm trying to do a looks like I'm trying to sell my Leap and buy back in August 6th. If that goes through, I'll buy this back. But what I'm trying to do is put a little bit more cash into the account so I can trade some options. And I have total cash available $83,000. So I'd like to be able to take some cash and add it to my options, which you'll see are not part of the inventory. So this is the inventory, and my cash is set aside. All right, so looking at this, we got an August 6th, our call. Our last price was $149. Our call is $147. So we're actually doing just fine. Now, this is why my account looks like it's a lot lower than it really is, because the inventory is actually ahead. You can see that I had 16,000 invested, and it's worth 21,000. On this one, this Leap, this set of, there's 3 here, so that's 3 times 100 shares of stock. There's 3 contracts. 3 times 100 is 300 shares, and this is 3 times 100, 300 shares. When we get to September 16th, 428 days out, follow the purple hand here. When we get to that date, I can buy the stock for $77.50, or I can buy it anytime between now and September 16th, 428 days out. I can buy it for $77.50. It's currently selling for $149.15, so I've got a lot of profit built in there. When I do execute this, I will go ahead and buy these 300 shares at 77.5. This is called a LEAPS, a long expiration anticipated. I forget what the P is, but anyway, it's a LEAPS. It's kind of like a leap in the future. You pay the premium plus the future stock price, and that's pretty much how much you'd have invested when you buy the whole stock later on. But anyway, right now I only have 16,614. If I wanted to get out of this and not take advantage of the 77.5, if you do the math, this is actually better at this point. So how much profit have I made on top of that? 21,600. So my profit is $4,986. On this particular leap at 300 shares, which is 3 contracts, I've got a profit of 2,475. So why does it say that I've got a loss of 2,559? Well, it's quite a ways away from August 6th. There's 22 days. So the person on the other side of the desk, remember when you do a call, I have told somebody they can purchase this stock for $147, and it has already jumped to $149. Now that's 6 times, you're looking at $2 over that amount. That is 6 times 200. Excuse me. Yeah, 6 times 200. So it's a $2 difference times 100 shares. That'd be a $1,200 if I wanted to buy it back. Now, $1,200 is a lot different than $33.15. That's because there's time value. The person on the other side of the desk is hoping this will go up even further. And if it does, then, good for them. I have topped my profit out at 147. So, this is what I'm going to make, about $7,000 minus the $1,200. I'm going to make about $6,000. And it's saying I'm only going to make $4,900. Well, that's because there's time value in here. So if I let this go ahead and slow down, and maybe it will. Maybe it'll slow down. Maybe it'll come back down to 147. But I've got 22 days left, so I'm not worried about it. I've got an order in there that if it hits a $70 credit, I'm going to go ahead and take it. So it's out there to close and go ahead and sell the stock if it hits a $70 credit. Right now, the mid-range is 66.48. So if I were to take a look at this order, I know we're going really slow on this first one, but I think it's a good example of how you look at your calls. The order is out there to buy back 3 of the calls because I sold them 3. I'm going to buy them back, and that buyback would cost right between $540 and $565. This is your bid, this is your ask, bid and ask. This is your bid, this is your ask, and I am offering somewhere in the middle here. Add them both together, it comes up to 70. So this is to sell 3 of those contracts, and the bid is $770.50 and the ask is 73. So when you put the 2 together, 565 and 73 is about, you're looking about 68. And what they say the mid-range is a 66.47. I'm offering 70 because I've got plenty of time before we get to August 6th. Now the order's in there for July 19th, which is coming up fairly quick, so I'll have to go out there and extend this. I'm not going to extend it yet. I'll wait till July 19th. So we'll go back out, jump out, that is Apple. So the way you close it in my particular brokerage is you just tap on the little down arrow there and bring it back up. Now looking at Alibaba, you've got 250 call. That's a long ways from the 211. Alibaba fell a lot 2 weeks ago. I'm going to make $368 on this by tomorrow. I can get out of it right now for $6. There's really no reason to get out of it because it's not going to hit $250. And then I've got a 240. I've got 10 of them in there, 10 contracts. So that would be 10 times 100 is 1,000. I've made an offer to someone on the other side of the table who has purchased that offer. They bought my offer. I sold it. The offer is you can buy this stock for $240 a share up to and including July 16th, Friday at 3 o'clock. After that, offer expires and is worthless. The contract has expired. So I'm going to make $650 on that. If I wanted to get out of it right now, Tastyworks, my online brokerage out of Chicago, is suggesting that it would probably cost me about $25. This is not guaranteed. You have to do, I asked for something because I'm trying to sell it. I asked for 25. They may bid 30. I may bump that up to $26, and then they may say 27, and I can accept 27. But this is always a bidding auction when you're dealing with the stock market. So this is just a suggestion on how much money you get out. I've already made this contract. That's not a suggestion. I was committed to selling this for $240 all the way up to July 16th. Remember, it is July 15th at 7:19 in the morning. The market opens at 8:30. This will change a little bit. It'll probably go down because they're going to realize on the other side of the table that we're not going to hit 240, and I've only got 1 day left. So this may go down to $15. But I'm not going to actually put a order out there and ask them if they'll take 25 or if they'll take 15 and start the bidding war. I'm just going to leave it there for right now. If I want to roll it, I'll show you how we do that later. Checking Alibaba, going down the list here, we've got another order for 800 shares at 220. That happened to be a short calendar diagonal that I did. I went and bought Alibaba when it was really low at 205, and I said I'll buy the 205 through September, and I will sell a call. So here's the call that I sold. I made $813. If I want to get out of it by tomorrow, it'd cost me $236. Well, why are these costing so much different amounts? Well, this one's $6 because it's 250. This one's 25 because it's 240. This one's 236 because it's 220. I don't believe it's going to hit 220 by tomorrow either. So I'm going to go ahead and let that roll and just let that go till tomorrow and see how well it turns out. Now here's my next one, which is, well, first before we get to this put, this is a call where I've offered to sell this at 220, and I'll give them the stock if it hits that at 220. What did I back that up with? We're going to have to roll down here a little bit, and there's my 8. So I bought 8 for August 20th, and this is what I own, so I'm not selling this. I bought this, and I paid $7,000 for it, for 8 of them. Well, which is about, whatever, $1,200, no, $900 a piece. And right now it's worth $37. So I'm not going to make a lot of money on the stock, and that's what this is all about. You put this much money into the market, and you can go back and forth all year long with these $37 pluses or minuses. But here's where the real money's made. I sell, and this is what part of Trading with Rich is all about. I sell at 220. I bought it for 210. I'm selling it for 220, and it's currently at 211. And so how much money did I make on those 8 shares to $7,000 I have invested? I made $813. Now that was over a period of about 2 weeks. I'm not saying about, it's exactly 2 weeks, because I do these in 2-week increments. And the good thing about it is it's not quite 2 weeks. That's why I said about. We have one more day left. We have one more day till July 16th. Today's July 15th to actually get to keep all of it. So this is, how much it's worth to the other side. They want to keep it for, they're willing to keep spending $236 of the 813. This is what the other side would get back if I decided to get out of this contract. Now, I'm a July 16th put in there. Look at this. We got a July 16th put in there for 1,000 shares. That's 10 contracts for tomorrow. And I've got it at 210. Boy, am I cutting this one close. So anyway, I'm very surprised that, I'm making $4,790 here, and I can get out of it for $1,500. I'm really surprised they aren't hanging in there tighter on this one, because it could go down to 210 very easily. So this might be a consideration to go ahead and buy this out, because that's really good. But I have to have this covered, so I actually have an 1,800 at 207, and I have a $1,700 invested at 205 to cover this. So it says they're worth 245 and they're worth 437, so that's about $700. I'd have to pay back. They'd pay me the $700. I'd pay them the $1,500. It's not bad. It's not bad. So I'll tell you, anyway, we've got some other calls out here for July 30th and August. We've got some puts out there in August. What are my puts at? I have to do a puts at $200. Probably be just fine in August. So far, that's looking pretty good. But realize that's why I've got such a negative up on top. I've got these puts out there that are saying you're down $1,100. Well, I'm actually not down. The put is 200. The current price is 211. It can go down to 202, and I get to keep everything. I get to keep all $1,100. But it's showing that I'm down that amount because of the time value. It's worth this much to the other side of the table. It's worth 1,162. So I'm obligated to keep 1,162 on the sidelines to pay back to them, because I may need to pay it back if I want to get out of this obligation. This obligation has 36 days to it. I have a $200 put out there on a 211 product, and it's trending upward. So this should just keep going down and down and down as the time value evaporates. So a lot. We're making $270 on every call. We'll make that up, and if Blink starts to come back up, that's the electronic car charging company. We could probably do, between now and August 20th, we can probably do 2 or 3 calls at this amount. So we're going to cover this either way. It's just going to take us a little bit. But the CCL, it's been a disaster. Nothing's happening until July 30th, so we won't worry about that one. Chewy, July 16th, tomorrow. We're looking at our setups for tomorrow. So quickly, we got a 95. Call out there. It's a long ways from 95. It's not going to hit that at all, so it's way down, and the stock is down. So we may lose $260 on this calendar event that I put in. We'll see by tomorrow. Doesn't need to come up very much. We got to get some of this stock back. The call is fine. The call is fine. It's just the stock went down. And if you know the market here, after they announced the pandemic news, and they announced that we're sitting at about 6% inflation now, it has hit the market pretty hard. So I had a real downturn. That happens. Kronos. July 16th, we got a 10 call in there for 767, so we're fine on that one. Golden Nugget Online Gaming, we have a July 16th at 15, so we're fine on that $500, but we're not fine on this put. Looks like we could be down. Let's hope this goes up $1. This thing dropped fast with the news about the pandemic. So I got 2 days for this thing to get back up again. I got Thursday today and Friday tomorrow Uh, I could be down $900 if that doesn't come back up and it stays at 11, 12. I'll be down about, yeah, about 850 bucks. You can do after you make the contract. Here's another contract for IMMR. It's not till August 20th, so I'll make $390 on that. We look fine. I'm just checking to see if the call is anywhere close to the price. It's not, so that's great. JD.com. I got a put out there $72 today for tomorrow. I've got today and tomorrow. So I'm going to make $2,500 on that minus the $95 I wanted to get out of it. I insured it by putting an insurance policy behind it of $70. So if it dropped below $70, I'm not obligated to anything below $70, but it's at $75. So I'm going to make this $900 tomorrow. Looking pretty good. It's at $860. This $95 is going to evaporate by tomorrow. I'll be up at about $940. So this is how puts are supposed to work. This is how you nail them left and right. You make 900 bucks over 2 weeks by doing a put at 72.50, and I insured it at 10. There's another reason why you do insurance. When you put insurance behind it and you limit your loss, you're actually taking a lot of risk out of it. You're not trying to risk yourself going all the way down to zero. I just risked it going down to 70, and it allows me to buy more with less money. That's another topic, how to buy a put and insure it. Let's just check the rest of them. This is kind of a large account. It's 450,000, 459,000 in inventory with 80,000 in cash. Looking Marvel, got a lot of things going off tomorrow on the 16th. So we've got a 58 call on a 56 product. So we'll make the whole 196 there. So we look good on that one. Notice I usually hit about 90% on all my calls and puts. But when you miss one, you know, it might cost you 900 bucks. We'll see by tomorrow whether that carnival is going to cost me 900 bucks. But anyway, we'll quickly looking at July 16th, that's a 55 on a 43. That's a 50 on a 43. That's a put of a 42 on a 43. And we've got insurance behind it like this. So I made $1,272. I can get out of the contract for $552 by today, but why would I do that? I only got one more day to go. Why? Because it's a 43 and it might go below 42. So I might later on when the market opens up. But when you take the profit here of 680 minus the 1,200, you're looking at about a $720 profit. So that's actually a good one to look at when the market opens up. I'm going to look at trying to probably get out of this by tomorrow. I'll probably buy my obligation back instead of and Pepsi. August 6th, 155, currently at 154, so Pepsi's fine. Peloton. We have an iron condor going for next week. Yes. We're trying to make sure that the product stays between $121 and $110. If it stays between $121 and $110, then we're going to profit when you take the two differences of $2,000 and $3,000. That's about, looks like $6,300, and you subtract the $4,000. Gonna make $2,000 on this particular iron condor. This is an iron condor where I have purchased a call at 121, anticipating put at $110 with some insurance behind it, and they're saying there's a 70% chance that the put won't be hit. So between the put, which it might hit that quicker than it does the call, if it just stays in between those two, that's what an iron condor is. And this looks like a great setup, even though it's showing I'm losing money on it, $2,600. I could end up by next Friday clearing about a little over $2,000 on this iron condor. We'll see how that works out. I'm going to show you, and August 20th for the leap, no problems there. And then XPing will be the last one. Let's check our July 16th, see if we got anything out there. And we don't. Everything looks like it's July 30th, and we look fine. So, Okay, folks, the market opened up about 25 minutes ago. It's 8:53 on July 15th. We were looking at all the July 16th products that were getting ready to expire. And I just thought I'd do a quick update and show you what happens when the market um, comes up pretty quick in the morning. So this morning at 8:30, Alibaba, as you saw in the previous example, was 211. And we were hoping that it would stay above 210 because remember, we have a put down here for $210 with some insurance behind it. We'd like to be able to keep, the 1,200 bucks that, the difference between what we have for insurance against our premium. We'd like to be able to keep all that by tomorrow. And it was sitting at 211, which was close to 210, and we were hoping that it would go up. I said it had been trending up. It did. It went to 215.74. Now I'm going to show you something here. Remember when the inventory was worth 321? Now it's worth 333. So it actually went up to 416 total for the account. And our inventory, that's our cash along with our current inventory plus this, got us this, but we have 459,000 invested. So long story short, we're doing real well with this. See the 250, what if, just a half hour ago, it would have cost me $6 to get out of that one. And since it's going up in price, it was $25. Now it's $35 to get out of it. But they already paid me $650 on these 10 contracts for $240. It's not going to go to $240. But if it does, I'm more than happy to let the stock go at $240. That would be fantastic. If it goes to $241, $242, I'll let the stock go or I'll buy back my obligation. But anyway, it's only good till tomorrow. So it went from 25 to 35. And this one was, it was about $130, whatever. It's gone up to 388 because they're thinking the probability that it might hit 220 is 80% now. The probability that it'll hit 240 is still 99.5. The probability that it would hit, that it's going to stay out of the money and stay profitable is still 99.5. So these two haven't changed an awful lot. But this one's changing a little bit. I think it was showing 83% before. Now it's showing 80%. That maybe, maybe it'll get to 220 by tomorrow, which is fine if it does. My put, fantastic news that this has gone up to almost 216 because my put for tomorrow is at 210. Remember, I told them I'd buy 1,000 shares of stock which is 10 times 100. I'll buy 1,000 shares of stocks at 210. Well, it's heading the wrong direction for the other side of the table. It's heading up to 216 and my put's at 210. So this is dropping quickly. For me to be able to get out of this, it was going to cost me about $1,000. Now it's worth $192 and I'd have to pay them $315. Well, I don't think that I'm going to pay them $315, even if I do sell out of my insurance policies down here. I don't think that I'm going to do that. So that's what happens when the stock goes up. And look at that thing climb, going to 216. Well, that's making my inventory get back in line quick. Like I said, when this gets back up to $250, $260, which it will sometime in the next 6 months to a year. I'm not guaranteeing anything. I'm not telling you to go out and buy Alibaba. But I've been following Alibaba for about 3 years now. This thing goes down and then it goes back up again. And that's a whole nother lesson. But that's just an example of what's happening there. The other thing we wanted to look at was the NEO. That we had a $42 put on. Oh, thank goodness. It got back up over 42. So now we're going to collect the whole premium on that one also. I don't think Carnival's doing any better. Let's take a look at the Carnival. Luckily, the Carnival is not till July 30th, but it's not moving around very much. And then looking at XPing, I think we had a few things out there on XPing. Everything else was fine when we reviewed it. No, they're not till July 30th. So it was just NEO. And It was the Neo put and it was the Alibaba put. So the Neo put for tomorrow, reviewing again, if it doesn't go down to 42, then we're going to make the 1,272 minus minus the insurance. So if you want to do a quick calculation on that, I'll try to be fast here. Let me put my handy dandy calculator up here. 1,272 minus the insurance of 260 and minus 424 insurance. I'm gonna make $588 on that. And really did not own the stock. We made $588 as an option. So we own stocks, we own bleeps, we own calls, we own puts. We got a lot going on with Neo. Just for a grin, let's just look up here, Bob, and see what we're going to make on that put. Because we are going to make this. No guarantees. There is still one more day left. But we have $47.90 that they put in our bank account. We gave them back $180.35 and $17.20. Yeah, we're going to make $1,235 in 2 weeks off of this put for Alibaba. So very, very profitable. I only had to put out about, I never actually put on any of these, I never put out more than $2,000. So I'm going to make about 50% return on investment in 2 weeks. Wish I could do that every week. That's why I like to hold a lot of cash back and run some of these options on stocks that I know really well. Never a guarantee. You never know when it might drop down to 205. Never know when it might go to 225 in Alibaba. But I do own a lot of the stock, so I'm hoping it keeps going up. Because when you look down here on all these positive numbers, these are all stocks and shares I own. So I've got 3, 4, 5, 7, 8, 9, 10, 13, 14, 15, 17, 18. I've got 18 times 100, so I got 1,800 shares of Alibaba in leaps. I'm working it. I'm not just sitting on it. And Baba's one of my major players and going up really good today. Again, it's July 15th. It is now 9 o'clock, straight up 9. You look down here at the time. It's 9 o'clock on 7/15. Alibaba took a turn for the better, and Neo took a turn for the better. So even though when I calculate all the money that I'm possibly going to make, which comes up to about $19,700, I thought I was going to lose a possibility of $2,000 on CCL and Neo, especially. Maybe another $1,000 on Baba. I was going to take my profits down to about 16,000. And now I think I'm probably just going to lose the 1,200 on CCL. So we'll end up clearing about $18,000 for the first 2 weeks of July. And I'll do another one of these videos in the next couple of weeks, and we'll see what the total number adds up for the whole month of July. Wish me luck trying to get back to the Philippines. I'll be leaving on July 30th. So you won't see an awful lot of trades on July 30th, but I have a lot of trades that I'm going to put out there for August 6th. Have a great day. I hope this was helpful. This is the follow-up to the previous video that we did at 7 o'clock in the morning. This one's at 9, and we just saw how things move fast in the market today. the last thing I want to show you is how much money do we have a possibility of making by July 16th. How much money do we have out there that we can possibly make, that we have on the table, you know, whether it's a call, whether it's a put. We saw some diagonal calendar events in there. A diagonal is a calendar event where you're buying a short-term stock and writing calls against it. And then there we saw an iron condor in there, and that's where we buy calls and puts and hope the product stays in between. How much can we possibly make this month so far? And remember, we're only in the middle of the month, so I'm going to go ahead and place some more orders when July 16th comes. So I should be maybe not double that amount of money for the second half of the month, but I can easily go, no problem, being 25% more than what we're at. So a real quick exercise on how to look at how much income you're generating from the premiums. I'm going to show you that exercise right now. This is an exercise in looking at how much money you've got on the table for premiums. And this is for the month of July 2021, and we are currently at July 15th, right here in the mid part of the month. So looking at the IRA, first we're going to open everything up. We're going to run the symbols from A to Z. So we'll start with Apple. But we've got $459,000 invested into our store here. How much money are we making in a 2-week period? We're looking at July 1st. We actually put the puts in, I think it was put all the calls and puts in on July 2nd for 2 weeks, all the way through July 16th. We got a bunch of them falling off. But how much money is actually available? So to be made. Now, we've already put this money into our checking account, but we may have to pay some back if we want to get out of our obligations. All contracts are, I agree to sell this by this date at this price, and if you, buy that agreement from me, then you can buy it at 147 all the way up to and including August 6th. So how much could I have made on that? Well, I could have made $756. Now this is my inventory, so I'm not going to count that, but I'm going to count the 756. So let's go ahead and pull the calendar up so you can see as I do this. 756 plus, we're done with Apple. Baba. Oh, lost my calendar. I won't close these, I'll just roll them. 756 plus Baba. There's a few more contracts in here, aren't there? So I can make 368, or I did make 368. I may have to pay back some by tomorrow. See, I may have to pay back $6, but the question is not how much I'm going to pay back, whether I pay 25 out of the 650, because I'm not paying anything back if it doesn't hit 240. I'm not going to pay anything back if it doesn't hit 250. It's currently at 211. So I'll move the calculator over here so you can see what we're earning so far. So we got the 756 plus the 368 plus the 650 plus the 813. Now we got to put out there at 210. So that's a plus 4790. So you see so far we're up to 7,300 in earnings. But we had to do insurance on this put, so that's a minus. We will minus the 1835, and we will minus the 1720. The next one is a call for July 30th. This is on the table, so we're going to add. We're currently at 3822. We're going to add the 270. Going down, add the 748. And that's product that we own for August 20th. Here's a put. $1,100. And then we had to subtract the insurance, $534. Now the rest of it is all product that we own. So we're currently at 5406, and that's all Ababa. Blank, we can make 270. CCL, we could have made 2650. Chewy, we could have made 163. Kronos, we could have made, or we are going to make 255. We're not going to hit 10. See the 10 over here? We're not going to hit 10 by tomorrow. It's a 767. We're not going to hit 10. The probability that we don't hit 10 is 99.5%. According to Tastyworks, that's what they run their algorithms on. You know, the probability of us hitting that is 99. Probability of us hitting Chewy, it's currently at 78, and the call for tomorrow is at 95. It's at 99%. That's about as close as 100 as they'll actually give you, because nothing's ever guaranteed. You never know what will happen in the market tomorrow morning. But so far, we've got the 163 in there. All right. Then add the 255. Add the 500. Add the 1,055. Oops. And then we've got to put over here, we got to take the insurance off. So we need to subtract the 155 and then add the 1,545, then subtract the insurance, 390. So far we're in the G's, and we're up to 11,299 in premiums for this month. And IMR, we'll add the 390. The reason why we're not adding this 12,000 is because that's our inventory. On our inventory, we made 390 on, about $13,000. So we actually only have about 12,920 invested because we brought our cost basis down by $390. So we're up to what, 11,689. JD.com. We've got a put out there, which we're gonna make all full money on. So full money would be add the 2530 minus the insurance, and now we're up 12,600. Marvel, we're going to add 196. You don't always get rich by hitting $900 deals, but I can live with $196 on an investment of 61.52, especially when the stock happens to be going the right way. So I'm going to move over here to the right a little bit and show you the stock's up $2,419. I bought it at 61.52 and it's currently worth 85.70. I like these deals. The stock's going up, and I'm making premiums every 2 weeks. So I'm making $200 on a $6,000 investment that's already worth $8,000, but I'm making another $200. So I can make it, if I keep doing this every 2 weeks for 26 weeks, we're looking at about $3,000 more in premiums, and I'm up $2,000 in stock. So I could finish the year being up about $5,000 if I sold my Marvel at the end of the year. I don't know if I'll sell it or not. We'll see. But I got to make a decision by January of 2021 because it's 190 days away. I have to decide. Onward. We're not done. 672 plus, move the purple hand, 28 plus a put of 1272, the one we looked at earlier, minus the insurance of 260 minus 424. Reason why there's two of them there is because I broke it up into 4 at that insurance and 8 at that insurance, and to cover these 12. puts up there. So we're looking pretty good there. We're going to end up making $600 on this as long as it stays above $42. Where are we at? We're at 891. So plus 891 plus 1660 minus the insurance. We're up to $16,000. Now we're getting into the inventory. We own 12, 15, 10, $22,000 worth of inventory. Pepsi. Pepsi's getting close. August 6th. We're going to make $146. You might say, well, how you doing on Pepsi? I don't know. Let's take a look. Pepsi, we bought it at 37. We bought it at 37.60. It's worth $49.80 right now. So we're up $1,200 on Pepsi. But it's saying, oh, you're really behind $217. That's the time value of money. Okay, the time value of money means that it'll evaporate by the 6th. And if it stays right here, then that'll go down to 0. But anyway, back to kind of a long one here, but it's a good example. Now here's the iron condor. We bought this trying to keep the price between 121 and 110, and pausing. Stud. Hey, I'm right in the middle of talking on a video. Let me call you right back. Okay, I'm almost done. Okay, Peloton. This is the iron condor. We're trying to keep it between 121 and 110. So we have a call out there at 1680, which is our insurance on our call, and we have 2740 to make. So we can add another 2740, and we subtract the 1680. Now, yes, it is our inventory, but it's our inventory covering this particular put. So we need to add the 3620 for the put and subtract the insurance, just like we've been doing all up and down the line here. So now we're up to $18,744. Winnebago, a $390 call. And our last stock is Xpeng. Let's take a look and see what we're making on these. So we're making $358. We got a put here, so we need to take the 2. $1,250 minus the 900. This, and then it looks like the rest of them are just stocks we own. So I don't have everything covered on this thing. I'm letting Xpeng kind of run its course. I've only got 10 covers. I got 300 full shares, and then I've got a lot of inventory. 4, 9, 14, 20, 23, 20, 27, 29, 34, 46. So I have 46 contracts, and I've only got 10 of them covered. I'm doing some things with that. So anyway, the answer to the question is, how much money can we make on premiums this month? It's $19,842. Now, are we going to pay some back? Yeah, we're going to pay some back. We probably won't, hit every put that's coming up. But so far, the only one that really looks bad is the Carnival. But it could happen. They could drop quite a bit. The Carnival is not looking good for July 30th. I mean, it's dropped about what, $6, $6.50 just in the last week, from $28 down to $22, and I had a put in there at 26, and I had another put in there at 24. 26 and 25. So when you take the insurance against the actual product, this is my worst one. This is a disaster. This hasn't happened in a long, long time. This is one of those, you know, that you just take a bloodbath on, but you always do the insurance so you don't get killed too bad. I don't want to pay $6. It was a 28. I don't want to pay a $6. If I'd owned the stock, I would have lost $6 a share, and that's 30. That would have been 3,000 shares of $6. That would have been an $18,000 loss if I'd owned the stock. But I'm doing this option so that I can limit my risk. I would have made $2,600 and put insurance of $1,300, so I would have made $1,500 on this transaction. What's going to happen instead is, you know, even though it's showing a large amount, as I get closer to July 30th, I'm not going to lose $8,000. It's going to actually go down because it's showing $8,000 here, but it's also showing $3,800 here. It's showing that I could lose $3,000, but that's because it's not July 30th. It says I could lose $3,000, but I know that the most I can lose is the difference between these two right here. The 600 minus the 2,600, the most I can lose is $2,000 bucks. I think we've calculated $1,800. So I'll just wait. I'll wait till it gets to July 30th. Hopefully the price gets back up over 25. But if it doesn't, I lose $2,000. And that is the worst one that I'll have for the whole year. This one is the worst one. I've only had to take a loss on about 5 of these puts, and I've done probably 250, 300 puts on all my accounts. So, you know, you take a $2,000 hit every now and then, but right now through the first half of July, I've made $19,842. And you say, well, how much did you have to invest to be able to do that? Well, it's $459,000. So what is my return on investment? 19,842 divided by 459. So divide that by 459,042, which is the amount of inventory I have invested, and you come up with 4%. Now that's 4% over 2 weeks, 4.3 to be exact. 4.3 times how many 2-week periods are there in a 52-week year? 26. So we're going to multiply that times 26 to get an annualized rate of 112%. So at this current rate, you know, it's showing 112%, and that's without buybacks for this month. And I know I'm going to get hit with that carnival. But let's just take the $2,000 loss off there. Let's call it $2,500, and let's take the 19,780 minus the, let's just call it $2,500 loss, and that'd be 17,280, and divide that by 259,042, and let's just say, okay, that's 6%. Cut. Trying this again. Take the 19,780 minus the 2,500, and you get 17,280. We'll divide that by the amount of inventory we have invested, which is 259,042. We get 6.6% times 26. I did divided. 6.7% times 26 is 174%. So we're making 174% on our investments. Now, I want to double check my numbers on the 19,780 for the first 2 weeks. Divide that by the 259,042, and that comes up to 7.6%. We multiply that times 26. It's So 198% return on investment. So the premiums actually make you a lot more money than holding on to the inventory and losing it or not losing it. If I were to actually keep running at these numbers, I can not only get my full amount of stock back, I would actually double my money. This is not a get rich quick. This just happens to be a very good month. I'm hitting on all cylinders, making a pretty good percentage, but I do have a lot of money invested, and the stock market has fallen down. So how do you make money when the stock market is beating you to death and you're down? You write premiums, you write calls, you write puts. You do, as we can see in these examples, you do an iron condor like we did here with Peloton. We have Peloton between 121 and 110. We're hoping it stays there. You do diagonals, like we did with Chewy and these others. I don't actually own any stock here. I'm actually just doing a calendar event. I'm saying by July 16th, I want to make $163. I invested $433. Not hard to see that's about a 33% investment for a 2-week deal. Sometimes I own the inventory. I own $10,000 worth of inventory, and I'm making $255. Here I own the inventory, and I'm even doing puts. I'm doing calls. I'm doing calls on full shares. This is where I own the whole share. I've got $30,000 invested there. That's how you do this. But out of $459,000, I'm making $20,000 in 2 weeks, and it's not hard. I'll do it again for you. $20,000 in 2 weeks, and you've got $459,042 invested. That's 4.35 times 26. That's over 100% return on investment. So this is how you do the calls and puts, and that was just a quick exercise on how much inventory we have sitting out there and what kind of money we're making on it over the last 2 weeks, which was almost $20,000. This is Trading with Rich, signing off on July 15th. We'll do another one at the end of the month in August and see how much, before August 1st, we'll see how much we had in there for the whole month. These July 16th products are going to be gone. They expire. Everything you see with July 16th, they expire. I collect 100% of all the money because I did not hit any of these calls. When you look through there and you look and see, well, how many July 16ths are there? Well, there's a few. There's 500 shares. You had the other shares above. There's 1,500 shares. There's another 2,000 shares. And then not July 16th, you got another 1,000 shares. This is how you invest your money. You're renting out your stocks. You're making offers to buy stock at a cheaper price, and if it doesn't hit it, you collect the premium. You're making offers to sell your stock at a higher price. If it doesn't hit it, you make the premium. And you've got 8 contracts out there, which represents 800 shares. And I said, you can have this at $55. How much are you willing to pay? $672. So, this is a pretty lucrative business if you know what you're doing. That's why you're here with Trading with Rich. I'll go ahead and sign off. Have a great day, and I hope you learned something. If I went way too fast, just keep watching for future updates on Trading with Rich. Hit subscribe, hit the notification bell. You'll see when I do a new update on how these stocks went further. I'll stay with this account because it's got a lot of different examples in it. It's just one of my portfolios. We're investing, $459,000 worth of inventory, and we've got some cash in there to work with, so we can do some puts. We're looking really well, but this cash balance is part of this, folks. So we actually have $459,000 invested in inventory. So signing off. Trading with Rich, July 15th at 8:01. Market opens in 30 minutes.